Where's Frank? This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing at Sobel Co. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. As a quick disclaimer, the views and statements expressed herein are my own and not necessarily those of Sobel & Company or NJCPA. Put the S in there too for Frank. So it's been a very lazy, crazy day of summer type of thing with the AICPA and the FASB and everybody. It's been very, very quiet and there's just not much coming out. So you're going to cover some previous stuff, not duplicating, but just a reminder of things and a couple other little things that are in the news that I think may affect accounting and auditing, but not necessarily pronouncement specific. So with that said, there is a proposed ASU put out by the FASB. It's for financial services and insurance. Now, keep in mind, a lot of the stuff I talk about on here isn't just general and specific. Sometimes it's very industry specific. Like this one is for insurance entities that have derecognized contracts because of a sale or disposal of an individual or group of contracts or legal entities before the long duration contract effective date. Whew. I know if you're sitting there listening, you're saying, gosh, I hope on the nano credit question, he doesn't put that in the question. This is very specific to those in the insurance industry. We don't deal with anything in the insurance industry in our office. I will read up on the pronouncement and stuff, but generally it goes away after a while. But if you are in the insurance industry and you have something that relates to this, it allows an entity to make an accounting policy election to exclude contracts that meet certain criteria from applying amendments. Get this. I remember talking about this in one of my A&A updates. I think I did it the Passaic chapter, Bergen chapter, from ASU 2018-12. So it all ties back to, and this is what drives me crazy, is they come out pronouncements, they tell you this is what it has to be, and then they update it later on. Remember how derivatives, I can't even think about how many changes they've had with derivatives, or the revenue recognition. If they came out with it a while back, they've come out with, I think, at least a dozen changes to the revenue recognition or enhancements. Either way, those are the comments are my own. So if you are in the insurance industry, look into this. This is an exposure draft, so you can comment on it if you agree or disagree with it. But either way, you should just be aware of something that's out there. As it relates to AICPA, there really hasn't been much that's come out, relaxing a little bit in the summer, which is good, gives us all a little bit of a break. But what's going on in our office, and I'm sure going on in a lot of other offices of people that are in public practice, is EBP audits. Now, if you don't remember, the society had some seminars on this, the EBP symposium. They actually have seminars that are coming up, I know in September, relating to defined contribution plans. The EBP audits, the reporting has significantly changed. There is no longer a limited scope audit. You're not doing limited scope audits anymore. I know that the A&A research group would kill me for not knowing, but they're 103 AEC blah 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 blah. Liz Harper in my office knows it exactly what it's called, but it's no longer called limited scope. It's referred to this 103 whatever. And the audit opinion is now 4 or 5 pages long. It's a lot. I QC the EBPs, and just reading the audit opinion is just crazy in itself, the way that they've made this. And I don't know what readers looking at these audit opinions saying, oh, I get it now. 4 pages, and they haven't even hit the statement of assets. But one of the changes that I've been going through a lot, and I've been having a little bit of difficulty with, and you'll probably see this in what you're working with, or if you're going to be working on financial statements, and even if you're in industry and you have an EBP and you work on the financial statements, there's a footnote that has to change. It's the certification footnote. Remember, we had the limited scope because we had the certification. So now we still have the, we don't have the limited scope, but we still get the certification. And we say in the opinion we have not audited certain things. And in the old, I'm not going to go through the whole full paragraph, but an example of the paragraph is plan management has elected a method of compliance, blah, 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 blah. And they say the statement of assets and the change in assets for periods ending 2020 and 2019. And then they said, and the Schedule H. Remember, that's the statement of assets held. The Schedule H, which is supplemental for the period of December 2020. That's it. Now, the new disclosure that comes from the guide, from the AICPA guide, the new disclosure just says, and this one I'm going to read the sentence, certain information related to the investments and notes receivable from participants disclosed in the accompanying financial statements for ERISA required accompanying financial statements and ERISA required supplementary schedule, including investments, notes receivable from participants held at December 31st, 2021 and 2020, and net appreciation and fair value, blah, 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 blah. Here's my problem. Here's the problem that I have when I'm QCing, is that we say here financial statements and required supplementary information for the periods ending 2021 and 2020. Now, anybody that works with EBP financial statements, you know that the supplementary information is not comparative. And I, as a peer reviewer, I'm looking at this, and also a QC person looking at this saying, you're kind of indicating that the supplemental information is comparative, and it's not comparative. Last year, we broke out the Schedule A separate and said 1 year only. And we do know that the P&L does not have to be comparative. Put that aside. So I've been really bothered by this change, and I don't know why they changed it this way. So we called up the Center for Plain English, and we said to them, you know, why did you do this? Is this the way it's supposed to be? And their response back to us was, well, if you notice, there's a comma in there. And that comma kind of creates a separation, and somebody will know that it doesn't necessarily have to be comparative. That's just crazy. I think absolutely crazy, and there's going to be one other reason why. I know that they're going to change this at some point, and somebody's going to pick on it and say, how did you not know that you should not have been reporting this? And I wish that the Center for Plain English and the AICPA would pick up on this and say, it can't be worded like this. And here's a big reason why. One of our financial statements, one of our clients' financial statements has a non-conforming incident. Okay, they weren't contributing properly, so they have to, fund including losses, and there's a supplemental schedule. That's not certified. That is not certified. But if you read this paragraph, not changed, it says financial statements and required supplementary information. But that's not certified. So we're trying to say, okay, now do we put in there except for this one? It's a mess. It used to say Schedule H, it used to say specifically 1 year, and it was very clear and straightforward. Make sure you change this paragraph to what they have in the guide, because that comma matters. Make sure you change this paragraph and make sure you're reflecting what's in the guide, and I will keep working on to get it changed back the other way. You're all going to hate me, I know. All right, I know I spent a lot of time on that, but that's big because I don't want somebody missing that and peer review coming in. All right, let's talk about just a couple other items. I'm going to talk about them pretty quick because I knew I spent a lot of time on that, but I felt that was a big one, at least for me it was. SEC has come out with concern of gamification of stocks, gamification of thrones of stocks. Gamification is the digital engagement practices that firms may use to encourage more buying and selling of stocks. Okay, so the SEC is looking into this, and why I'm worried about it, you're like, Brad, this sounds like it doesn't relate. It might relate to NOCLAR. Are they involving themselves or engaging in practices that are against policies, procedures, or laws, really against laws and regulations? So just keep watching this, especially if you deal with traders in some way, broker-dealers. NOCLAR is really big in the AICPA right now. All right, this one I felt like stealing from Nicole DeRosa. Anytime I get a chance to take some stuff from her, I do. I didn't steal it from her, but she's going to talk about it maybe in the future, so I'll try and come up with it first. The IRS has come up with a new method of accounting method change procedure issued for small business taxpayers. And you're saying, Brian, why are you talking about this? There's a rev procedure, whatever, for small businesses to obtain automatic consent of change to a simplified method of accounting. Small businesses, excluding tax shelters, are defined as that meets the gross receipts test on average for the prior 3 years of 25 million inflation adjusted. Okay? Now, there's a lot more to that, and Nicole will go so much more into that. Why am I talking about this? If you can get your bankers to not require GAAP basis financial statements, by all means do it. You get away from the lease disclosures or lease accounting. You get away from the revenue recognition. A lot of things. Outside the East Coast, a lot of people use tax basis financial statements. So if you're going to be allowed to do it for the financial reporting, for financial statements, and you can do it for tax now under this, talk to Nicole about it, by all means I'd recommend you look into it. So those are the items. I see that I'm at my 10-minute mark, and let's jump into the closing. In closing, I'd like to remind you about some upcoming NJCPA events. On August 29th, there's a full-day webinar on critical accounting, auditing, and tax issues for construction contractors. On September 20th, there's a full-day webinar on how to avoid deficiencies in your peer review. And there are 2 in-person A&A updates in September. The Bergen chapter is hosting a 4-hour event on September 22nd, and the Essex chapter is hosting a 4-hour event on September 23rd. And I have a little piece of information. I think it's the Middlesex chapter is trying to set up for an in-person session too. Shh, don't say I said anything about that. Jim Hardenberg will kill me. Anyway, register for these events and more at njcpa.org/events, and be sure to join the NJCPA Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening.